Hi everyone, a very good evening. You're watching The Money Show on ET now. This is your one-stop destination for all your financial planning related matters, from investing your money to saving taxes and of course how to even spend all of that money wisely. I'm Mubina Kapasi and here's what we have lined up for you on today's episode of The Money Show. Today is of course the 15th of June, and yes, while we are involved in various other nitty-gritties of how to adjust to a life that involves working from home, we must not forget the important due dates, one of them being the first installment of advanced taxes. Today, you have to pay up a certain portion of your advanced tax or your total income tax that will be payable for FY21. And it's not the entire amount, but it is a certain percentage, which will also, by the way, require you to estimate your income for the whole of this year. May sound a little tricky, but I promise you it's not that tough. We're going to make it easy for you right here on this episode. We'll also be taking on board some questions and queries, so stay tuned for that. And also, on the second half of the show, we'll be talking about health insurance. The IRDAI has introduced a whole host of measures, rules, regulations for insurance companies, and guess what? They are all customer friendly. So without any further ado, let's kickstart the show by bringing on board our very first guest, Mr. Jayant Pai, CFP and Head of Products with PPFAS, joins us on the show. Mr. Pai, thank you so much for joining us today on The Money Show. In this environment where things are looking a little precarious, they're looking a little tough, many people are facing a cash crunch. You're going to ask our people that, listen, you've also got to pay your advanced taxes for the 15th of June. So, Mr. Pai, firstly, has there been any relaxation on that front? Who is liable to pay this advanced tax, which is roughly about 15% of your total tax payable for FY21?
Hi, Mubina. At the outset, I hope everyone in your circle is keeping good health. Second is, certainly due to the upheaval caused by COVID, there have been some relaxations on the income tax front, but fortunately or unfortunately, this is not one of them. So we have to pay the first installment of advance tax today's deadline. Now, who is liable to pay this? So basically, there are three big buckets. One is salaried people. It may sound funny, but yes, salaried people too are liable. Second are freelancers, and third is people involved in business. So now, apart from this, you are liable to pay advance tax only if your estimated tax liability exceeds 10,000 rupees for the year. If it is under that, you're not liable to pay advance tax. You just got to pay tax after the end of the financial year. And apart from that, even people who have opted for the new income tax regime, they too are bound by these same rules as what was prevailing earlier.
Yeah, make no mistake, just because the FM has given you two options or two tax regimes to choose from, it does not mean that when you opt for another tax regime, it absolves you of your advanced tax liability. That stays, just as your tax bill as well will not be going anywhere. Probably it may reduce a little because the rates have reduced, but the tax bill stays, and hence the obligation on your part, the responsibility on your part to make your advanced tax payment as well stays. Mr. Pai, let's talk about how to calculate the income and consequently the taxes. Maybe as a salaried person, I know what my yearly CTC is, so it's not that difficult. But, for a businessman, for a freelancer, especially for a freelancer, in fact, these individuals really may not be having a handle of what they will be able to earn in FY21. And I think, Mr. Pai, now this question all the more is relevant because we seriously don't know what we are going to be able to earn in FY21. There's so much of uncertainty around us. So any tips on how one can sit down when they're putting pen to paper? We just have a couple of hours, by the way, before they can make their advanced tax payment. Any thoughts on how they can sort of assess their overall income for the year?
Yeah, certainly for freelancers it is a little difficult, but you could. I mean, the government doesn't want you to estimate it down to the last penny. So you could have a rough estimate. Say, if you want to be on the conservative side, you could assume you are earning the same as last time. Or if you want to be a little aggressive, you could choose say 80% of last time or any a round figure, but the aim is to see, the aim of advance tax is twofold. One is to ensure that you are not burdened with the entire tax payment at the end of the year, and the second is the government does not want revenue loss, due to factors like you being unable to pay the entire amount. So you could estimate it based on some metric, and then pay an amount, and then if in case there's a shortfall or you feel there is some short tax payment that you made, you could make it up in the next installment. So basically, there are 4 installments of advance tax. So if you are paying less this time, next by September when things become clearer, you could make it up. So that's what I would suggest.
Yeah, so you don't need to estimate your income down to the last penny. Even if, let's say, you underestimated your income, you can always make up for the shortfall in the next, quarter's installment, which will be exactly 3 months later. So it will be on the 15th of September. There's no need for you to be able to estimate it down right to the last penny. Mr. Pai, in your first answer, you mentioned that your net tax liability should be 10,000 rupees. If it's more than that, then you are liable to pay advance tax. That begets the next question. A lot of individuals, whether you're freelancers, whether you're businessmen as well to a certain extent, or whether you are salaried, especially if you're salaried, your income comes to you after deducting TDS. So when you say net tax liability, am I supposed to calculate the tax, subtract the TDS deducted, and then see if I'm liable to pay advance tax?
Yes. Yes. So once you estimate the gross amount, there are 2 deductions that you have to make. One is the deductions, the TDS deduction. The second is the deduction under the various sections of subsections of Section 80. That is the regular one, say ATC, ATD, and all. So you are given that latitude. So you can maybe estimate that you will be availing of the full limits of those sections, and then arrive at the net taxable income. And if after that, if the tax amount still exceeds 10,000, only then you have to pay. So there is a lot of freedom on that front.
Okay, all right. Now, Mr. Pai, what are the penalties? I mean, why do you advise that if an individual whose tax liability is, of course, exceeding 10,000, why would you advise them to ensure they make their advance tax payment within the next 7 hours?
Yeah. So although I said that you can, estimate an amount and then pay up, it should not be wildly off the mark. So that's why there is a penalty. So for instance, so the exact percentages are 15%, 45%, 75%, and 100% for each of the 4 installments. So for instance, if you have to pay a tax of 1 lakh, you have to pay 15,000 by June 15, another 30,000 by September 15, and another 30 by December 15, and a balance 25 by March 15. So that's how the breakup is. In case you pay a lesser amount or you don't pay an amount, you got to pay a penalty on that. So that penalty is equal to 1% per month for the period of shortfall. Now there are certain other nuances to this. So for instance, if I have to pay 15,000 this time, but I pay only 10,000, so my shortfall is 5,000, and so I'll have to pay tax on penalty on 5,000. But there is some relaxation again on that. That if I mean there are a lot of things in this. So I have to pay 15%, but I pay up to 12%. Then if there's a shortfall of only 3%, there is no need to pay a penalty. So let's not get too much into those things. The main thing is that there are 2 big buckets of penalties. One is under Section 234B, is what I stated. So is the shortfall per installment, and the second is Section 234C, which is an overall shortfall. So for instance, if you have to pay 1 lakh, but you have paid any amount less than 90,000, only then you have to pay penalty under 234C, which is again equal to 1% per month for the period of shortfall. So I mean, it sounds a little complex, but it's not so bad. But as a precautionary measure, it's better to pay a little extra rather than less. That's what I feel.
All right, fair enough. Okay, great. Well, there you have it, A to Z of advanced taxes. And folks, you just have a couple of hours. It will, I promise you, it will not take a lot of time for you to sit down and assess your advanced tax liability. And of course, not to mention, you don't need to go over walking to the bank at this hour or even amidst these times. It's all online. You can make your advanced tax payments as well online. There are designated banks for the same. All right, well, let's meantime move on and okay, let's take on board viewer queries then. We have the very first question coming in from Saket Lal. He has emailed us saying, as part of extension in the ITR filing date, whatever home loan interest I will be paying between April to June 2020, can I show it under section 24 for the previous financial year, that's FY20, and later claim a tax refund at the time of filing my return? Okay, it makes sense, his question, because the tax saving investments date has been now pushed to the 30th of June. So now he's asking if that's valid for the interest on the home loan as well. Mr. Pai, is it?
Yes, overall it is valid, but that is only for that particular year. So here what he wants to do is pay the interest for this quarter and claim the benefit for the previous year. So that is not allowed. See, the whole thing was that this was a sort of a tool of convenience for SSE. So SSE should not push the envelope, by trying out these stunts. So if he is paying it for this quarter, he should try and avail it for this quarter only, and not push it into the previous year.
And anyway, I think, an interest on a home loan is going to go on for a while now. I'm sure you're going to be able to accumulate enough interest that you will be paying for your home loan over the course of the next few years as well. It will come of use even then. You can still claim it, under section 24. So there's no point of any which ways doing this. Unless, of course, there's some wide vagaries in your income and, last year's income is higher and that's the reason why you want to set off. But yeah, any which ways that would be incorrect to do as well. Okay, let's do one thing. Let's now get right back to Mr. Jayant Pai, and Mr. Pai, let's just very quickly talk about what exactly is your opinion on what should individuals do when it comes to making their tax saving investments. We have just the last 10 odd days to go, 15 odd days precisely speaking. What in your opinion should individuals do in terms of tax saving investments for the last minute?
Yeah, actually, those who had planned in advance would have already done it in March. But these are 3 months which have been given for those who were late. So in general, the same rules apply. So don't let tax govern your investments. So in that sense, don't invest in something just to save tax. Dovetail it with your financial life overall. So for instance, if you are paying school fees for your kids or paying life insurance premium, do it anyway. Don't do it just because you're saving tax on that. And also in terms of investments, ELSS is not the only sort of investment you should make in equities throughout the year. ELSS should be a part of it. In addition, investment should be made in other equity funds because of the benefits which equities give you overall. So also don't listen to 10 people about tax saving. Do your own research if you can. Otherwise, get paid financial advice rather than getting free advice from dozens of so-called well-wishers who may not actually be so.